Chainlink has been on fire recently, really rallying up over 70% this year so far, and it shows no sign of slowing down just yet. In today's video, we are jumping into the world of the technical analysis of Chainlink, taking a look at the price action and where I think things are heading. Now, I am recording this ahead of time. I'm recording this the night before as I have another appointment for my eyes, make sure that everything has gone ahead properly and is correct with the surgery. So let's go ahead and roll the intro and get right down into today's video. Okay guys, here we have Chainlink. We're paired up with USDT. We're on the one-day Binance chart. And as I said, I am recording this ahead of time. This is a bigger macro view, and it's basically giving us the idea of kind of where things are heading. Now, I know according to some of the comments in the YouTube section or the YouTube comments on the videos, some of you guys are missing Elliott wave theory. Some of you maybe haven't really noticed terribly too much difference and all that kind of stuff. But for the most part, we can see here that I'm still tracking this move to the upside with Elliott wave theory. Now, Elliott wave theory is a really complex subject matter. And to keep it really, really simple for you guys, I'm just going to get an empty space just here, just so you know, right? Ultimately, there's lots of different ways that we can try to figure out whether we are trending in an upward direction or a downward direction. That isn't really driven from whether or not you have consecutive candles that are X percentage higher, and you can really kind of get really confused with it. Elliott wave theory actually has a really simplistic way and approach to this, and it's basically a 5-wave structure like that. And there are some criteria when it comes to a 5-wave trend pattern from an Elliott wave theory point of view. First of all, wave 1 will be, a bit of a run, nothing terribly too major. A wave 2 normally retraces 50%, but can come all the way down 88.2% retracement of the wave 1. But the real important takeaway is that wave 3 has to be 161.8% of wave 1. Basically has to be the 1.618 on the Fibonacci sequencing level. Okay, so it has to be 161.8 times the size of wave 1 to be recognized as a wave 3. Then a wave 4 will not overlap the wave 1, okay? And then wave 5 will basically be your blast off top. This is a trend-based pattern, okay? This basically tells us that we're in a bullish trend to the upside. Now, there's some psychology that also goes hand in hand with the 5-wave pattern. Wave 1 is usually considered fake. Wave 2 is I told you so. Wave 3 is an institutional buy that retail investors miss out on. Wave 4 is usually institutions selling off their positions, and wave 4 is also then, or wave 5, I should say, is kind of triggered by retail buying that dip, believing that it's still got a lot more room to the upside. Okay, so understanding that this is usually considered fake, this is a kind of by the moment opportunity for institutions. Institutions sell the top of wave 3 and retail buy the bottom of wave 4, and then they sell the wave 5 when they realize it really hasn't got terribly too much more to it. Okay, so that's the psychology of the 5-wave trend-based pattern for Elliott wave theory. It can be really complex if you don't follow the theory, but it is basically just psychology tracking the herd, the majority of investors. Okay, it only works on highly liquid markets. There's no point in trying to do it on a micro cap coin. It becomes very unrealistic and unreliable. But on the bigger coins, such as Chainlink, it's really good and really predictive. Now, with a 5-wave trend-based pattern like this is a great positive sign because it means that we have a high probability that the bottom is in for Chainlink, right? These 5-wave structures, they can appear in a few other places, but for the most part, we're going to just consider this a trend reversal from the low that we saw in June of 2023 and great lift to the upside. But how much further has it go? We can already see here that we've had the wave 1, the wave 2, we've had the institutionals players kind of pushing up the wave 3, we've had the wave 4, the retracement to buy, and we're in that 5th wave, and we're actually quite a way through that 5th wave movement. So how much further has it got to go? Well, we can use the Fibonacci tool, the Fibonacci retracement tool, to help us with that. Measuring the distance on the wave 4, we can actually see where this is likely to go for the wave 5. The wave 5 normally rallies up to 123.6% or 1.236 on the scale, up to to the 161.8 or the 1.618 on the scale. Here we can see that we're already tapped into this range, right? We can see it right here. It would be $19.28.7 to $22.22. That would be the high range to be expecting on that fifth wave movement. But the other thing with Elliott wave theory and with these trend-based patterns, 1, 2, 3, 4, 5, are the internal workings. Let's go ahead and zoom in on this, right? In these workings, there should be a 5-wave pattern internally for each of these. They cannot be 3-wave patterns. They have to be 5-wave patterns. Okay, so we can see that we'd have a 5-wave internal pattern to complete out the final 5th wave movement. Let's come back down to our structure here. At the moment, we have not got that final move just yet. Okay, so we want to do some sense checks here. We have a diagonal based starting position. We then have this move coming in here, and we can see that we haven't yet hit that 1.618. This means that this could either be one of two things. One, we haven't finished the wave 3, or two, we are actually in a diagonal based pattern, and we will be looking for a final move to the upside under a diagonal-based structure. Now, those diagonal-based structures are slightly different, but they are still 5 waves, right? There's your 5-wave standard structure. Your diagonal structure would actually have an overlapping pattern between the wave 4 and the wave 1. Okay, now, in ending diagonal, the wave 3 still must hit a 1.618 fib scale. However, under a contracting or expanding diagonal, the wave 3 doesn't have the same constraints, meaning it can fall short of the 1.618 fib scale. Now, this is important because we've not hit the 1.618 here, but we are inside our expected range, meaning that there is likely to be another surge to the upside, and what I would appear, or at least what appears to me, to be the potential of an expanding diagonal. The expanding diagonal we can draw with some trend lines. Let me actually go ahead and make this a little bit easier for you guys to see. Trend line coming out from the bottom, and then I will take it from here because that seems like a good place to go, and we'll expand out. You can see how this would expand. That would actually put us with a 5th wave movement over and exceeding our expectations, meaning that that final 5th wave would be the longest wave in an expanding diagonal. So coming back up here, it would be something to this effect. Wave 1 must be the shortest. Wave 3 cannot be the shortest. I guess wave 1 should be the shortest. Wave 3 cannot be the shortest, and wave 5 must be the longest. Okay, and waves 4 can overlap with wave 1, but they cannot retrace more than their previous corrective waves. So, for example, wave 2 must not cross the origin, and wave 4 must not cross the origin of wave 2. Okay, so those are kind of the fundamental basics of the expanding diagonal-based patterns. So we are in one of those positions where we either are going to be completing the wave 3, hitting the 1.618, or we are in this expanding diagonal. Either way, the result is the same. We are likely to see a continued surge to the upside on Chainlink over the next few days, potentially weeks. Okay, so this is a huge positive for Chainlink. It still shows us with potential for the upside, or potential to the upside for Chainlink, and we can still see some additional gains being made. Where would this break down, and where would this become invalid? Well, at this point, we should not cross down any lower than the $12.20. That low that we saw in January of 2024 is our anchor point. We cannot cross down lower than there without invalidating that 5th wave move to the upside. So I still expect us to push up, and I would say, we'll be targeting out higher than $22, potentially 23 to 24, somewhere in that range. But again, until this structure appears, it's going to be really hard to be really 100% accurate about it. But it does look like it's giving us some pretty decent signals to kind of think that we have more progression to the upside to be had, and we have got some fantastic gains on the market, or on Chainlink here and in the crypto market before reversal. And talking about reversal, where do we think it's going? Well, reversals, like everything, are going to be pretty damning to many retail investors who are not expecting it. As I said, we have these 5-wave patterns, right? And as we kind of have these kind of structures playing out, specifically a 5-3-5-3-5 or this 5-wave pattern, this will have a big retracement. This can either be an A wave, so we have this A wave here with a B wave retracement and another 5 waves to the upside, which is probably the highly likely scenario on this daily time frame. Or alternatively, a more bullish kind of scenario would be that this is a wave 1 and we have a wave 2 before a wave 3, 4, and 5. Okay, and everything kind of scales in. Wave 1 would be a 5-wave pattern containing a 5-3-5-3-5 structure internally. A wave 2 retraces 50 to 88.2% of the wave 1, and then you have that big blast for 1.618 on the wave 3. Alternatively, the ABC structure, like this, would basically allow us for a retracement, typically of around 50%, before we go up into that next big launch to the upside. So where does that put the retracement for Chainlink? Well, I think we have this kind of target range down here at the moment between $5.66 and $9.84, but I think this needs to be refined just a little bit. Let's hypothetically say we do push up towards that $25 range, which I think is highly likely at this stage. That would put us more towards this range of accumulation, basically $10.93 upwards towards approximately $7.48. It would actually be technically a little bit lower than that. I will show you what that looks like by reversing our Fibonacci retracement tool. Put this back up to the $25. Here you can see it would be more towards the $5.79. Personally, though, I think will be better to be thinking about that higher range than the lower range, but it gives you a bit of a ballpark figure as to kind of where the retracement for Chainlink would go once we finish off this internal move to the upside in this next big blast. The higher that we go, it will change this target a little bit, but for the most part, that's going to be a great place to accumulate. Now, what about the history? How does this kind of look in comparison to previous fantastic runs that we have seen? Well, Chainlink has a lot of retracements. It's not something that we kind of just go straight up and we never see, big kind of cooling off periods or anything like that. We can see here that we have these massive kind of corrections that do come in quite aggressively for Chainlink. So for example, taking a look at the blast up to the top in June of 2019, that initial drop was 68.11%. We then rallied back up again from that low that we had in September of 2019, up 116% up to November of 2019. Since November 2019, we saw an additional drop of another 49.38%, only to then reverse back on the market, taking us up a whopping 211%. When we then saw the pandemic crash, we dropped down 72.67%. So you can see here that the Chainlink market is incredibly volatile. Great bull market, but even here, as we got up into August of 2022, there was an additional drop of 63%. Then rally back up towards November of 2020, another drop by 50.88%. This is very common for Chainlink. There's a lot of drops, 43%, all the way through the previous bull market as well, where we saw initial 71% drops, but actually cooled off at 74.75, right? There's a lot of pumps and a lot of dumps when it comes to Chainlink, and we've seen a lot of moves to the upside, and I don't think it's hard to imagine what a drop down towards this level would be. It would be about 59% or 60% to get us into this little range down here. And I do think that is something that is highly probable when it comes to Chainlink. You can let me know what your thoughts are on all of this in the comments down below. The good news is I expect us to continue running to the upside before this correction comes in. When this correction does occur, it will most likely be coinciding with a Federal Reserve pivot or some other fundamental reason why the market will tank. Ultimately, I do think we are going to see some fantastic prices once again for Chainlink, but until then, I expect further green in the market. Guys, why don't you check out this video right here where JB is going through his thoughts and opinions on BTC.